All right, welcome back. Guess who's back? Back again. Slim Shady, Josh Brown. Tell us about this third time. Hopefully a charm for you and.
Yeah, this is toast. And by the way, first time I've ever been called Slim on TV, so thank you for that. Look, I have traded this. I have traded the stock twice before. Once successfully, once at a break even. But I think in the mid-30s, and the fact that this stock has pulled back because of broader consumer-related fears about the overall economy and people eating out, et cetera, I think it presents an opportunity because when you go through the last earnings report that they put out on February 19th, you just have to come to the conclusion that they have figured it out. They are hitting on all cylinders, and this is poised to become a really good business. They added 28,000 net locations in 2024. This is everything from like a counter service here, buy a muffin and coffee, to the entire restaurant chain in all of the Marriotts and everything in between. And they have a take rate of about 56 basis points. So you think of it as like a gross payments volume business, and then you ask yourself, how many other services can Toast sell their existing payment processing company customers? They're adding thousands and thousands of restaurants all over the country, and each time they do that, number one, they're making money from the transactions, and the number two, they can sell other services, everything from payroll to order management systems for the kitchens, and you name it. So it became a really good business finally over the last year. They've become profitable. They exceeded on basically every metric out there. I should point out, Block just blew up the other day because their payments business is not doing as well. So Toast is doing something very special within their niche. Morgan Stanley named it one of their best ideas for this year. I think the company grows earnings by 39% this year, over 50% next year. It's trading at a forward PE of 31, and they've just completed their first full profitable year. So I think it's still relatively early to the story.
What was the issue, I guess, that caused you what was the issue that caused you to get out of this a couple of times? I know you got stopped out once. What were the concerns, I guess, on Wall Street about this name that sent it lower to the point where you got stopped out, and then I suppose to the point where when you bought it back, you sold it again?
Well, two things. I have commitment issues, as many who know me know, but bigger than that, this was an unprofitable company in a tape where profitless tech was being punished. So some of it is the context of the environment. That's no longer the case. This company is showing how profitable it's going to be right out of the gates, and it's pointing to a roadmap of more adjacent opportunities in enterprise, bigger customers, a bigger footprint in different regions. And that, I think, really transforms this from a stock that I want to trade to a stock that I want to consider a longer-term position. So I don't have a huge position on here. It's something I'll be adding to. I accept that this is a high beta name. It'll be volatile, but this time I'm willing to commit to it, given the results that we've seen over the last few quarters. I think they've finally transitioned from being a speculative, profitless tech company to really something that's becoming an institution within financial services. Like, they are a very important company to the customers who work with them. I don't think that's going to change anytime soon.
All right, we'll keep our eye on that spiking stock. It is Toast, and Josh is back again.